Hello, everyone. Thank you so much for joining us for our weekly wrap-up again this week. My name is Jeremy Kronemeyer. I'm the operations manager here for Wickham Financial Group, and I have Graham Wickham here, president and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners popping on the call. Pretty mixed. I mean, we saw the Nasdaq up about 0.2%. The Russell was up about 1.3%. Now, that's the small cap index, and that's really been the big laggard compared to the other majors. We saw the S&P slightly down for the week. Sectors, weak. We saw 9 out of the 11 S&P sectors end in the red or down. If we go over to oil and gas, those inventories rose, which ended up pushing crude oil prices up about 1% for the week. Treasury yields, those were modestly higher despite some slowing inflation growth numbers that we did see last week. Some economic numbers, we saw the Core PCE come in rising about 0.1% month over month, or about 2.6% year over year. The personal income was slightly above forecast, where we did see at the same time some consumer spending down a bit. Jobless claims, that was the highest since November of 21. The Q1 GDP, gross domestic product, now that was revised up about 1.4%, as we saw some consumer spending revised down to a plus 1.5%. Durable goods, those numbers or those reports showed a drop in some business equipment investment. If we look over the consumer confidence, that eased as some sentiment index was revised higher. We look over to the housing market, stress across the board. So basically with higher home prices, higher mortgage rates, we saw new and pending home sales falling again. If we kind of wrap it up for this last week, we saw some government actions. We saw some new policy increasing some access for affordable housing. Now that was announced by Treasury Secretary Yellen. And if we go overseas, we saw the Japanese yen fall to its lowest level since 1986, potentially with some intervention coming from the Forex market. Now, we saw some inflation readings in Japan that accelerated, and we looked at some CPI numbers over in Canada and Australia. We saw some a bit of a rise over there. Now, looking to this week, we'll just see the U.S. markets. Listen, we've got a holiday week here. We're going to have a half day on Wednesday. I wouldn't expect too much drama, but overall, we're going to be closed on Thursday, half day on Wednesday for Independence Day. And heck, if we're closed midweek, many on our side of the street are going to take it off, and probably deservedly so, to enjoy it with their families. But we'll still be looking at some key data with some monthly jobs data. We'll look at some payroll numbers. The FMOC, the Federal Open Market Committee, right? They'll be issuing their minutes, and the Fed chairman of that committee will be speaking to the ECB starting on Tuesday. Now, we'll also be looking at some ISM manufacturing numbers. Some PMI data will be rolling out. And overseas, I think the big thing that's going to be happening overseas is getting into elections. We have the French primary election. We got the first round that already began. We'll have the second round next week. What will that look like? That's putting some pressure on the international markets. And then we're probably looking over at Canada. Their election will be on Thursday. And then China will have some PMI numbers coming out, so on and so forth. Jeremy?
Gotcha. Well, Graham, we always appreciate the information, and happy July 4th to everyone and their families. We hope you get a long break here coming up at the end of this week. And if you missed our quarterly webinar last week on Wednesday, go check it out on our website or on our YouTube pages. It was a really good one, kind of a mid-year review that Graham did last week. So we look forward to seeing you next week. Talk to you soon.
Happy 4th.